What is up, family, and welcome back to the channel. Please make sure to hit that like button, subscribe to the channel, and do that whole thing that is required to make this thing really fly with the algorithm, right? Welcome back, team. Let's get this thing rolling and rolling and rolling. What is up, family? Let me know that you can't hear me by throwing those A's in the chat right away. Let me know. Throw them right away. Man, it's good to be back. I know there's a lot of love out there going because I'm posting some of those videos on FNGR and GTII, right? So it's been a while since I've been covering that ticker team, but I am super happy to cover it now. I'm very happy to be chilling here with you guys once again. It is moving, right? So we do have some catalysts in line, so we got some stuff to go over. And I actually do have a little bit of a breakdown there for the fundamentals side regarding the, I believe it was an S3 filing, right, coming out of FNGR. So I do have a little bit to share with you within that realm. Please remember that I'm not actually the biggest fundamentals guy. I'm more of a stats guy and definitely more of a dude who looks at the numbers, right? So please take that with a little bit of a grain of salt, right, when I share with you these things, right? Joe H, what's up, you guys? So please remember, team, that I am actually talking to two different sets of people. I expect a lot more people to be coming into the YouTube side because of the title that I put up, and also the Discord side. So we have the Discord ARCa Bulls trading team on the other side right now, so you guys can also be there, right? So please make sure to hit that link in the chat, YouTube, if you want to join the ARCa Bulls trading team, where we trade the markets live every single day. So come on by. These last few days have been absolute gainers, including with plays like FNGR too. And I promise, guys, I promise one thing. I told you guys before, and I tell you guys right now, I am not going to have any risk on from both or either of those tickers, both GTII and FNGR. I'm still getting a lot of questions there in DMs and in mentions all across the social platforms. Please know that I am absolutely doing this for absolutely free. I am not gaining anything from FNGR for covering it, okay? So, or GTII. So I'm just not even risk on, okay? So I'm just doing it. I'm just doing it for you guys, just like I did before, the exact same way, okay? So I already see about 20 viewers coming in. Please make sure to hit that like button, subscribe to the channel, do that whole thing like we always talk about, right? I really appreciate everybody coming on by. Let me share the other screen here and just show you, right, what FNGR did today. We're going to definitely be looking at GTII too, because it had some news. Please let me know in the chat if you know the name of the new CEO for GTII. Let me know right away if you do know that name, and let's see what's up, right? Good to see, good to see. We're going to get this thing filled up just a little bit more. There's around 30 people coming in right now, so please make sure to hit that like button, subscribe to the channel, and come on by. Join the ARCa Bulls trading team by hitting that subscribe button, man. All right. So, yeah, let me know if you know the name. Yeah, that's right. Smoke screen on the other side is actually showing us that it's Rubari, right? Jonna, thank you so much. So just for your curiosity, YouTube, I'm going to go ahead and show you what I mean by who's watching, right? So let me just go ahead and show you exactly what I mean, right? So take a look at the other screen right now, and this is what I mean, right? This is the ARCa Bulls trading team. It's getting filled up right now as we're speaking, right? People are sharing with us their comments too. So right now we got Jonna saying that it's Rubari, smoke screen too, and that is who we're observing here as the new acting CEO for GTII. So what do we feel about that? How do we feel about that, by the way? Please let me know in the chat how you're feeling about the new change of management. Are they actually doing a difference? Do we know if they're going to do a difference? And most importantly, do we have a track record from that CEO? Who did he actually manage before? Who did he lead before? And does he have a good track record with those companies? If we don't know that, it's all good, right? This is why we're here today, so we can apply some inspiration and to see if we can back test the performance of this CEO to see if he can lead the company into profitability. Is that something that we know? I have no idea. But I would like for you to share with me what you believe in the chat right now about the new plan for GTII, right? And of course, breaking down some of the things for let's see, FNGR. We're gonna break down what the S3 filing did. I have some notes for you, right? Please remember, I'm not the biggest fundamentals guy, but I do have some notes for you to kind of review. And I guess a simplification over what the S3 filing kind of meant. Okay, so John is saying been on since November. Let's see if he can close something. Yeah, so you know what? I actually was reading in the GTII community within the ARCa Bulls Discord, and I was under the impression that there may not be plans for some type of merger or acquisition with other companies actively. Is that true? Am I hearing that correct? Or I don't know. Candace Morrison, good to see you here. Mark Roach, Ian Tucker, what is up, you guys? Joe H, thank you so much for that dono. My brother saying longing ARCa. My dude, that really means a lot. Appreciate you so much. What is up, Northwest, saying ARCa is back. I know, man. A lot of people have been messaging me, have been sending me DMs saying, "Is ARCa, you're back, bro. So good to have you, man." You know what? As long as we do have some movement, as long as we have these catalysts running, I'm going to try to help out. I'm going to try to help out retail, right? So it's all good. But what's up, Jay? Cool. Good to see you here, man. And let's see. Susan Michaels, by the way, thank you for asking me about my son. He's doing good. I got to say that he just had a little bit of an episode there, right? But he's okay. He just didn't want to be aside from dad. But you know what, you guys? I have something curious to show you. So let me go ahead and just pull up this. You're going to be able to hear this right away, right? So it's actually a little clip from yesterday, right? So please make sure to hit that like button as you're coming in. Subscribe to the channel. And I want to show you a little clip right here, okay? So look at this. I'm going to interact with it too, so I'm going to change it. Here we go. All right, so this is actually yesterday's FNGR stats video, okay? So I want you to pay really close attention to what I said here, and this really describes the importance over you trying to make, I know you guys, 13, 14, maybe 20-minute videos, they can seem a bit much. I get it, but oftentimes I release the exact places that I believe price can go to. Okay, so take a listen here. Range, your current ATR top is $3.33, very nicely placed right there. And if we look at a continuation from the mean reversion that we're getting as a bounce from $2.38, the upper bound of the two standard deviation multipliers landing at $3.66, landing right within the targets that we're observing anyway, right? So that's going to be your 339 to 350, and we're observing here 333 to about 366. So there you go. So that is what I mean, team. The targets that I just gave out yesterday towards the end of the video ended up being the targets that we nailed during today's price action. So please notice here on the charts that FNGR absolutely made its ripper here to $3.67, where we smashed just one tick away from the very top side, right? So 366 is what I was calling out, between 333 and 366, and we managed to get it. Remember that this is part of a statistical setup. Okay, we are going to be going over a few tickers here, okay, team? So we're going to be doing FNGR and GTII. We need to compare what the broader markets are doing in order to understand what FNGR and GTII will also do. So if you're in the chat right now, I'm going to display to you the importance of the broader markets in relation to small tickers like these, okay? We need to pay attention to the broader spectrum in order for us to understand the direction out of these assets. Sometimes when we get these immediate sell-offs and we get these huge drops in price or immediate rips in price to the upside, that often has to do with the broader market sentiment. And I'm talking about your indices, right? Your IWM, your S&P 500, what's big tech doing? We have to pay attention to those things in order for us to get to really achieve an edge over these tickers, okay? So here are the stats for FNGR, just in case you're curious over what I'm speaking of, okay? So check this out. Over the daily time frame on FNGR, right, I performed the back test. So this back test here is consistent to volatility and linear, which is this indicator here, right? This is my volatility heat map. This is combined with stochastic momentum, okay? So anytime that volatility exits this 15% of critical contraction, I observe that historically all the way through its entire trading history. So I pick up all those samples, right? I grab the samples one by one and I add them together, and I create a data set. Okay, so the samples here, total iterations are 20. 17 of those iterations were guessed correctly to the upside. that gives us a massive upside accuracy, right? So we're looking at here at an 85%, a huge 85% accuracy in this upside move. So that, look, that's the way you do that here is simply like this. All you do is add everything together. You get your total number. You get your total number of percentage, and then you divide this by the correct iterations. So out of the 20, 17 were made to the upside. So you measure the upside from those 17, right? Easy as that. And then you divide that by the 17, and that's how you get this average upside thrust. The average upside thrust is your mean. Okay, so statistically speaking, on a bell curve, if you're familiar with statistics, this is your standard distribution curve, right in the middle. That's your 33%, right? So now if we start, I'm gonna get a little more complicated here. There are different things that smart money and institutions perform in order for them to get a deeper edge over where price action can go, right? So we can deepen our mathematics here and really gain an edge. So we can calculate now the standard deviation. So the standard deviation gave us a little tighter of an edge, 35% up. Those targets we already nailed. We already knew we were going to get those upside targets over the last few days. Now, the other targets that we talked about are the ones that we reached today were based on local statistics. And local statistics, what I mean by that is simply this, okay? I have developed my own indicator here that applies the metrics over the data that I observe every single day. This is going to be available to every ARCa Bulls trading member in about a week or so, including the linear volatility heat map, which is this. I'm literally giving this out to the people who joined the ARCa Bulls trading team. So please make sure to hit that link in the YouTube chat, right? So this right here is the reason we're able to tell how far an asset can move up or down based on a 14 period, meaning over the last 14 days, we can just tell, right? We see how much action there is up and down during the last 14 days, and then the mathematics do their little thing here, and they tell you, well, you know what, on a daily period, it looks like you can move about 27 or 28 cents on average. So that means at the opening basis, any day that we open the trading session, 26 or 27 cents up or down. So this is how I'm able to tell you what targets we may or may not reach. Aside from that, we have the mean reversion plays too. This is how we were able to tell yesterday that 366 was in line, right? Look at this. So we still have it in play, and we absolutely nailed those targets. Team, it's not magic. I don't got a crystal ball. I don't got nothing like that, guys. And you know me. For those of you who have been observing my analysis on FNGR on GTII over the last 2 years, you know how I do things. You know I'm just the numbers guy. That's all. That's all, okay? So now you know the targets. Now, for the upside or continuation of this, we need to take a look at a couple things. First of all, guys, tomorrow is Fed Day, okay? We have FOMC minutes. We have CPI data coming out. All of these things are going to be critical to the price action of both GTII and FNGR. We need to make sure that we can observe what the broader market is going to say here. Okay, so we can't guess it. There's no way that we're ever going to guess that. Andre, absolutely. We're going to be talking about that S3 filing here pretty soon. And what's up, Honey Badger? Good to see you here. And Coin Fox saying we need to break 35. Yeah, absolutely. I agree. And let's see, Honey Badger, you're in. What's up? Hail New Year, and good to see you here, my brother. John, good evening to you from sunny Southern California. My brother, good to see you there. I love it. Sway, good to see you in there too, man. Sorry, team. I know there's a few people already in here that I haven't said hello to. I get you, man. I get you. I know I see the familiar faces up in here. It's been a long time since I've spoken to you guys, so I really appreciate you all showing your support still. It really shows how the ARCa Bulls name is still very much relevant within the microcap community. So I really appreciate you, all of you coming out. I'm really happy to be back here and hanging out with you guys. I just want to make sure that you know the edge here, okay? So again, tomorrow, CPI. We have Fed minutes. We have a bunch of things coming out that we need to make sure that we pay attention to. So if we have risk on, then we have to observe what this is going to do for us. Okay, so let's just say this: if CPI, your inflation, if it comes in hot, but if it comes in hot to expectations, I think the broader market goes up, right? I think everything temporarily goes up, and I gotta say, man. The S&P and big tech, all of this going up the way that it's going right now, it doesn't make any sense, right? It feels propped. We're way overbought. I feel like we need to take a breather here, but everything is still pushing to the upside, and FNGR here has been taking advantage of that for the better part of about, a few weeks already, right? This thing has been ripping to the upside since literally back here on March 20th, 2024. This, just to be clear, guys, okay, let's see. This is the percentage incline that you have seen since that time, about almost a 100% incline in price through FNGR, okay? So please be careful here. Now, I got to say that I don't know if anyone read the S3 filings that came out for FNGR. Those S3 filings are very curious to me. They are, you know what? You guys, I know there's a lot of you who speak to me about really high numbers in the naked shares and all that. I get it. I understand. This could be a good move for that. So if there really is like a huge number of short shares, and especially synthetic shares, then this move could really pose a threat to the short bias, or a further threat to it, because of this 100% pump already to the upside. It's already kind of gnarly. Okay, so let me go ahead and share with you what I believe they meant with the filing, right? So let me try to read that. I put it down here on some notes for me to give it to you. Similarly, let's say this. You want to know what it means in English, right? Give it to you in English. So let's simplify this, right? So first of all, let me go ahead and grab that. Where is the? I'm gonna grab. Yeah, here we are, right? This is gonna be the S3 filing here, and this section that I'm highlighting, this is of particular importance. Okay, so this is where the juice really lands. So we're talking about 52.7 million warrants to purchase shares of common stock at 5.2 million shares of common stock. So you see the difference between the numbers, right? It's kind of it's a times 10. Okay, so let me go ahead and pull here my notes so that you can interact with me over what you believe it means, over what ARCa is potentially saying, right? Remember, you guys, this is something that's going to be traded entirely separately under the ticker FNGRW. Okay, so just bear with me. Here we go. So let's simplify this. The company is giving away something extra to its current shareholders, specifically warrants. A warrant is like let's say this. A warrant is like a coupon that gives you the right to buy more shares of the company's stock at a certain price in the future, okay? So here's the breakdown. If you own shares of the company's stock, you're going to get these warrants for free, okay? So it's at no cost to you. For every share you own, you get one warrant. But these warrants don't give you a share straight away. You need 10 of them to buy just one more share, okay? So when you decide to use your 10 warrants, you have to pay $7 for each share you want to buy. You don't do this, okay? You can do this anytime before a certain deadline, which I believe is going to be 5 p.m. Eastern time, somewhere in the expiry, right? It's going to be 2026. So if you're a shareholder on the record date, you're getting a little bit. Consider this getting a little bit of a bonus that could potentially let you buy more stock at $7 per share, even if the stock goes up in the market later. Okay, so but remember, you need 10 warrants to buy one share, and this deal is only good until the expiration date, which is somewhere in 2026. Okay, so if you guys wanna elaborate more on this, please do so. Right? Remember, I'm not the biggest fundamentals guy, so I tried to break this down as simple as I can for those of you who have questions, right? I've noticed here that not a lot of people are answering the questions regarding this filing, so I tried to read it here in a quick breeze, and I wanted to see if there were any key points that I could point out. So, but that's what I came up with. Okay, so now you have it on recording. You could also refer back to this video at any time, right? You guys know that we're covering here FNGR and whatever else right away, so it's going to be the first thing that you're looking at. Okay, so. Let's say that there are a freaking bunch of synthetic shares. Well, that's gonna apply. If that's really the move that they're trying to do here, that's gonna apply a serious amount of pressure of upside pressure onto the asset. But you got to also know that you are fighting against people who are, let's pull this back. Look, I'm going to show you in the chart something very important. Okay, so let's go to the weekly time frame here and really put things into a certain type of perspective. Okay, let me hold on just a moment. Let me go back to my screen here. I need to monitor everything here, right? Okay, so let's put this into perspective here, okay, regarding this, regarding the position in which we're currently in. Okay, we're at pretty much the 50% of returns here, historical returns. That means that we are not quite in the decision process of making the upside continuation or the downside. When you're within this 50% of the returns, you're quite in the 50%. It's a coin toss at this point, okay? The key thing to worry about here is your weekly time frame, okay? Your weekly time frame is breaking above a major area of resistance, that $3.14. If it were me at this point, I'm expecting a pullback between $3.14 to maybe even $3 in the near future here, so that we can get some more bulls, right? We'll acquire more bulls, get some more buy side pressure, and rip this thing to the upside. It's already been kind of frothy. Please remember that from the back test, we've already realized your standard deviation and your average upside thrust. That's already looking pretty good, right? That's already looking good. If we are to continue to the upside, where the data starts speaking closer to the target of the warrants, well, that would be at the upper bound of your second standard deviation at 68% up, which would lead you to around 444. I do have targets there. I do have targets for us to observe. Okay, so this would be the back test here. So I'm observing here a 419 to 442. Someone asked me today in the ARCa Bulls trading team, they said, ARCa, what do you think the probabilities are for FNGR reaching that $7 to $8 valuation? I said, dude, that is a tough thing to answer. This was before we knew, this was before we had this catalyst. So I said, that is a tough one to answer. I'd say that it would be completely conditional. In order for us to reach those topside targets, we first need to get more closures above this 314. This daily closure is 1 feet. I like it, but we need more. Okay, now, the next area to combat, your 450. Please notice here, if you zoom out, just take a look at the chart for as simple as it is, okay? If we zoom out, you can see here there's a chop area, right? This little chop box here is very, very relevant because there is also this chop box here within that same zone and this box over here within the same zone. Not only that, is that we have a daily gap right here as well. We need to get over these obstacles, right? As soon as we can get some daily closures over those, I can see your deep fives into $6. That's okay, right? But we need to get these things out of the way, and we need to make sure that we can keep this within ourselves as a condition, and it is conditional, okay? If we don't meet those conditions, then the upside is going to become a little more difficult. The only way that you'll combat these upsides will be with another catalyst, something that'll make it rip. We already have something here in a reason to take the price action to $7. Okay, I personally, I'm not the biggest believer in the thousands and hundreds of thousands of synthetic shares. I can't prove it otherwise, right? And I can't prove it to be true either. But if it is true, this move here will be dangerous for short sellers. I'm just gonna tell it to you the way that it is. Okay, so please be very careful when considering any position openings here for FNGR. But if there is going to be a pullback, maybe that can be a point of interest for a lot of retail. Okay, we can get a pullback here to around that 314, maybe down to $3 before reaccumulating here and then going to combat that top side of 367, make our way to that 448 to 451, and eventually catch that resistance that we're looking for as the statistical move. Remember that I am only observing here one of the standard deviation upper bounds. Okay, so this is just the first. Yeah, this is just the first standard deviation. I still haven't calculated for you the second or the third. Bet your ass that those ones probably have a $7 to $10 in range, but I'm not putting it there just yet because there are a serious amount of people that have actually, they've kind of thrown their rocks and they've thrown their whatever at me for mentioning those targets in the first place. So I'm going to go ahead and stay on the safe side of things here and make sure that we can just go over the relevant local targets first, combat them, confirm them, beat them, and then move on, right? So I want to make sure that we can move slowly here and not get ourselves to start betting the entire world, right? So, or money that we're not willing to lose, okay? So please be careful. FNGR is definitely on its way up, and I would say that the next day, maybe intraday. Let me look at this. Let me look at the signals here, and then we can make better decisions. Okay, 4-hour time frame, sure, getting a little bit of a pullback here, consistent to what we're speaking of, right? Hourly time frame is showing us an upside thrust already. Okay, that's good. So, oh yeah. Okay, so this is the initial thrust. I keep on explaining this to my students and also to retail. So check this out. Okay, think of volatility as and momentum, right? So this is your volatility here. This is direction neutral. Okay, so if we're coming down in volatility, that just means that we're contracting. The rate of returns or the frequency of transactions is slowing down, right? As it goes into contraction, it speeds up once we start expanding to the upside. Okay, so this is completely direction neutral. It doesn't mean this gives you no direction. It just tells you how much transaction there is during a specific period. Okay, now what gives you the bias for direction is this stochastic momentum. Notice how powerful it is to the upside on a 30-minute. Okay, so your 30-minute time frame is pushing up with a huge force. So here's the comparison. Okay, imagine yourself in a body of water. Okay, a very still body of water, and you have a large wood pallet on your hands, right? And then you impact that water as hard as you could. That initial thrust is going to tell you how far into the future the waves are going to ripple on the water, right? So you have that huge initial thrust, waves start rippling, and they ripple further and further. So the bigger your initial thrust is, the bigger your continuation is within those waves, okay? So this is what I mean. The initial thrust here was made way, way, way back here, around this here, around these thrusts here, okay? So this thing just pushed onto the upside very hugely, and the waves started happening, right? So now the 30-minute time frame bleeds into the hourly time frame, and you see that we're getting already an upside on the hourly. The hourly then leads into the bi-hourly. You see that the bi-hourly is now starting to kind of kink itself just a little bit here, and we're at max volatility too. That means that we're potentially setting up a new wave towards that upside, while the larger waves are continuing to fall. Okay, so from the initial wave, from the first initial 15 minutes to 30 minutes, we're thrusting again. So that means that your 4-hour time frame will likely finish off by coming back down to the areas of about $3.14 to $3 before that 15 to 30 minute really pick up that wave again and throw this thing to the upside again. This is sentiment. This is psychology. This is literally us doing that within ourselves. So we get these huge upside thrusts, we take profit at these tops, and we reload again, and then we continue. That is the basics of distribution and accumulation within trading. Okay, so if you just want to know the technical side of things, that's how you can observe it. Okay, so if you are going to get that continuation to the upside, what can we do to determine what the targets are going to be? Well, the upper bound of your second standard deviation away from a mean break. Okay, so this is the 274. We bounced from 274, and now we're continuing on to the upper bound targets of your first and second standard deviation. 274 was here. This is your upper bound of the second standard deviation. It's around 435. Now, why does that sound familiar? Well, because 445 is very much in the zone where we spoke of just a little bit ago. Check this out. 422, and our range is right in here. 419 to 442, forward spot 618 at 448. Okay, so that means that your statistical side is telling you that over the span of about maybe 2 or 3 days of effort, we could definitely take a continuation to the upside. But please remember, we need a little bit of a pullback first in order for us to get that thrust, right? We need that pullback. And think of it as a healthy thing, okay? Because as we pull back here, we're going to allow more of the stragglers, right? More of the straggling bulls like, oh my goodness, I'm going to miss the boat here. Let them load. Let them load. It's a good thing for us to get this pullback here. So this is around the targets that I'm looking at here. If you are observing here the charts, please consider taking a screenshot here of these targets. If we are to fail that 302, there's one more area, and it's a very small area that I think I'm not personally the biggest fan of it. I think 296 to 294, but honestly, that feels a little too outside of the money here. And the only reason I say that is because in an average true range, 14-day close, the algorithm is telling us that we can reach 290. I'm opposing that a bit, just like I did yesterday. If you were observing the charts yesterday with me, I negated that bottom side of 290 there too. I said if we're going to get a pullback, we'll get a pullback here. The top end is going to be around 366 to 333. We got 367. Okay, so I'm going to negate that again today. I don't think your 290s are in line here whatsoever. We have too much relevant support in the way in order for us to, I just don't think we're going to hit that bottom side. It's plain and simple. All right, so if we do get that top side team, daily time frame ATR is leading towards a 345, but I really don't think we're going to get that. I think we're going to get a 350 break, and then we're going to start seeing about exploring these resistance levels here. So expect again tomorrow a 352 to around 367 as your top side of the range after a pullback. Okay, let's get this pullback here, rip to the upside, and experience a new top side. As soon as we can start consolidating within this area, we're going to start knocking and knocking and knocking at that resistance until that resistance becomes weak and we completely beat it. Okay, now remember that this is a very high risk asset. The upside is very well in line. Okay, all indicators, my algorithms, literally everything is saying go. Okay, but that doesn't mean that someone, when they get a freaking random itch on their left nutsack, they're going to just take the sell and then it's just going to leave everybody bag holding. That is a possibility. There's no way in hell I could ever see or be able to tell if somebody's just going to pull it. Okay, so know that. All right, now that you know your upper bound targets, heads up. Okay, heads up. But you know the play now. Okay, team, remember you can always refer back to this video. It's live. It's going to be here. It's going to be posted literally right when we finish the stream today. So I want to take a look at GTII as well. Okay, so we got a new CEO. Ribari, what was his name again? I forgot his name, but Ribari, I believe it was, right? The new CEO came in, Joe H, and I believe that there is, I mean, what are we facing, guys? Let me know in the chat. What do you think? What do you think that this is going to do for the asset? Like I said earlier, when I was in the GTII community from the ARCa Bulls trading team, people were saying that the CEO may not be actively considering, acquisitions or a merger or something like that. And I got to say that getting an acquisition or a merger for a ticker like this is key. It's absolutely key. And if it's not in the cards, then what would be in the cards in order for us to get another push to the upside? Okay, so if that's in line and we're looking bullish, please remember that this thing was sitting at around, it was declining to 20 cents right when the news came out of the new CEO. This thing ripped to the upside. It went all the way to 24, and it kind of sat at 24 and consolidated for a bit. For those of you who are watching it in Webull, yeah, it kind of pumped to the upside immediately, and it kind of staggered there, right? Now, I am seeing a little bit of a bearish formation here with your 4-hour time frame. And the bearish formation isn't actually validated because it's during it's during a downtrend, right? So we're getting this downside price action, and then we built this bearish engulfing candle formation. What does that mean? Well, your red body candle is engulfing the prior green body candle, which signals a potential continuation to the downside. I already see that we're catching some downside price action, breaking the structure already. So if that really means that we're going to get a continuation to the downside, then how far down can we go? Because this is supposed to be a good catalyst, right? So US1 Tahoe Joe is sharing with us some comments here in the ARCa Bulls trading team. Finger 314 being the previous day close. Let's see, Finger traded 378% of its average daily volume of 234,000. Man, you know what? That is incredible to know. Thank you so much, Joe, for that key information here. That really happened today. 378% of its average daily volume was traded today at FNGR. That's nuts. That is that is absolutely nuts. Okay, so here's the other thing. Candace, I think you may know about this as well. Is this, for GTII's new CEO, is this the doings of not legal advice for Richard Hoffman? Is that what you think that this is what he was doing? So Candace is saying this guy has already been part of the team, so it doesn't seem like he's going to make much of a difference. Believe me, I'm not just shilling on him. My cost average, unfortunately, is over $4. Damn. Jeez. Okay. So, oh man. All right. So let's take a look at, you know what, since we're not really in the know, let's just see what the charts can tell us. What could potentially happen here. But before we do that, team, please remember that I am, if you want to know how I'm doing this, I'm extending. Here's something that someone asked me, but I'm a beginner at trading. I'm like, oh my God, here we go again with that. I'm going to consolidate the 18-week mentorship into maybe a 4 to 5 week prior to the strategies mentorship that I'm now making. Okay, so that's going to be a 4 to 5 week introduction to trading, followed by the strategies mentorship, which is going to be an additional 8 to 12 weeks. Reach out to me, ArcMastersCourse@gmail.com. Guys, I am proud to say that I have literally graduated 120 master students to date. And the team is, a lot of the team is trading with me in the ARCa Bulls trading team daily. Some of them have gone off on their own, which is what I really want, right? Don't depend on signals. Don't depend on anyone else. Depend on yourself and your ability to look at price action and the markets, okay? That's really ultimately what I love. Okay, team, so reach out to me if you are interested in the Master's course. It's going to be a whole mentorship program, okay? So let's see if we can get that thing out of the way real quick, and we'll run it again together, okay, team? So the 4-hour chart, let's pull up volatility and momentum, okay? So this thing is still arguably pitched to the upside. We are, look at this. I'm going to pull the volatility index just up a little bit here. We're starting the flat line on volatility, which usually means we're potentially going to get a little bit of a push to the upside. So CoinFox is saying, I still like $3.96 to $4.20 together on FNGR. Thank you, my brother. Really appreciate that for you. By the way, guys, CoinFox is absolutely, if you see him here in the chat, he is absolutely a powerful trader, and he trades with me every day. Okay, so just to let you know, he's one of those dudes out there, and he also has his own channel. He's been nice enough to literally show his own Discord to my Discord. Like, bro, I love you, man. I love you so much. So, guys, yeah, you know what, that is very kind of you guys. Please, let's go ahead and break those 50 likes, he says, right? Please make sure to hit that like button, subscribe to the channel, make sure to interact with the algorithm, right? So we can get this thing finessed, so we can bring some more people in here. Really appreciate everybody for coming on by. All right, so anyway, the 4-hour time frame is still showing this upside, which now makes me believe that the 3-hour and the bi-hourly are still pivoted towards that upside or pulling back a little bit. As we move deeper into the price, into the time frames, you're going to notice that the upside becomes more and more relevant. 6-hour time frame, this is your 8-hour time frame smoothing out. This is your 12-hour, and this is now your daily. See how it's smoothing out with an upside pivot? It doesn't look like it's pulling back so much, and your buy daily is barely getting the read. So if there was a back test that we should probably consider taking, I've already taken a 3-day back test, but that's not quite ready. Your buy daily time frame is about ready to pull something off that's very interesting. We're at critical contraction, and we're starting to break that buy daily read of frequency of returns. We're starting to notice an incline of transactions on the 2-day of GTII. That means that we may get another pretty nice push into, like I said, guys, remember we have CPI tomorrow and we have FOMC minutes. So literally anything can happen. But if these signals are proving correct, that means that GTII is getting ready for another push to the upside. And if we can get a push to the upside, where can that go? Well, that would be the back test that we need to perform, right? Your back test of the buy daily is looking okay. All right, so let's pull on back here because we're noticing that we are getting some consistent reads for upside here. Okay, so let's pull on back to the hourly time frame. Let's see how we're doing here. Okay, hourly time frame pullback. Okay, so that means that we're likely going to face a little bit of a support bottom here soon. Okay, if not already experienced, but this is what I can tell you. Okay, let's focus on this RSI, okay? This is your RSI signal, that teal line, that represents price, okay? So let's just imagine this as your price going towards a resistance range. So it's going to hit a wall, right? You're going to face this wall, and you're just going to pull back from it just a little bit until you can knock it down. That means that if price action continues to the upside, very likely we can see a resistance range within this. You know how this thing barcodes? You know, a lot of people say that. They say, oh, it's barcoding again. Well, that's what I mean. This is your relevant top right here. This barcode area to this barcode top. So 24.51 to 24.71 could be your next area of resistance. And then if we are to look beyond this, because that's really close in proximity, we have another area of, I would say, we have another area of chop right above right here. Okay, so let's just make sure that we can get this in line so that we know what those resistances are. Heads up with your risk, okay? Please be careful here. All right, so that means that the RSI will come up to that SMA 14 right there, right? That SMA 14 is not only resistance for us, but also the gravitational zone of the momentum indicator, okay? So you see these junctions here, this 50% right here, you have the 60% right here, you have down here the 40, and you have your 30. Any junction here has a gravitational point 2% up and 2% down, okay? Look at where your SMA 14 is landing, right within the 2% of the gravitation. So that means that we would likely face resistance from both the moving average and the gravitational zone. So we'll get that little bit of a pullback here and then come back down to see if we can load some more bulls to really push on beyond this SMA 14. Okay, it doesn't look like it's a permanent downfall. In fact, it looks like we're pushing towards the upside to combat it. Okay, I know we have these resistances here, right? But as long as we are below this zone in specific, okay, on the 30-minute time frame, you're 25.50. As long as we're below that range, then we kind of are in a little bit of a pickle here. But this is just one leg up. And also remember that this is a descending formation here. So this is set to break out. How would that happen? Let me show you in psychology the way that would happen, okay? We take a trend line here and we identify how that trend is being drawn or how we're riding it, right? So the likelihood of us riding it would be something like this, okay? This is more of the stuff that I'm going to be showing you in the strategies mentorship, okay? What are the targets to face if we do break out of this formation here? This is bullish, by the way. So any descending formation like this is a bullish reversal. Okay, so let's get that top side. So we measure we measure the channel, right, from the top side to the very bottom side, just like this. And then we apply it to the breakout point. Wherever it is that we break out, this would be the target to observe. Let's just say, let's keep it a conservative. Let's say that we would break out on Wednesday, April 10th, right? So the top side target here would be facing around 2610, 2609. And if we look back, then there absolutely is a lot of room there and a lot of consistency. Let me point them out for you. First of all, I'm going to draw a line there, okay? I'm going to draw a line right at the resistance of that line that we just drew, right? So horizontal line like this, and I'm going to point out a few things to you. This is how I can figure out targets, right, that are of higher validity. Here's one. This is another one right down here, right? You see those areas. You can see this entire zone here resisting and supporting from this line right here. So that's going to be another zone there too. So this is what is telling me that we may be able to see price action move from this chop zone where we currently are to the next chop zone. And that next chop zone could be right up here, anywhere. Let's just say, you know what, let's keep this in line. This very top side price action here, very much like this topside price action there, right? And like this line here. So let's mark off another little line there, right? And we're going to observe this as the next potential chop zone that we would be in after making this leg up. Okay, so just like this is what I'm really expecting price action to do in its fair bit of time. Since we have here this is telling you that we can move about 3 ticks. In other words, 3 cents on average, right? Every day that you get the opening candle, GTII can move 3 cents up or down. Okay, so this is telling you here that we closed at 23.42, but the daily ATR top is reaching 27 cents. And inversely, the daily ATR low is 20 cents. We were speaking of a support bottom just recently, and this is at 22.72. So if we were to face any further downside here, I do think that the 20 cents is viable, but we have too much of a support realm right at 21.82. Right down here. See all those candles there, all this crap here? The stronger the area, the more contact points you have, the higher the likelihood will be for us to pull back into, okay? So that can be a zone that we can use as a bounce area, right, before we can actually move on to the upside. Another thing is that that's very, very close to the bottom side of the channel too. So then we get that, distribution into reaccumulation, and then we continue. And this is very much what the indicators are already telling us. Immediate short-term time frame downside. So we'll get that quick little run to the downside. Watch out for that 20 to 22.72, right? Then get the push to the upside, potentially start the breakout process in this. And then the upside targets that we can face would be 26.09 to 30.04. We'd, obviously the local resistance would have to be combated, right? We just spoke about these, the 24.71 to 24.51, and then this range too. 25.50 to 25.21. These are your local resistances, right? We need to get rid of those in order for us to really reach the range where things can start making a difference in price action, okay? So that is where I think GTII may go. Now, I'm gonna now urge you to stick around here because we need to take a look at what the broader markets are saying, because GTII and Finger are not entirely running alone. I know that the OTC markets that's our form of decentralization. Yes, I understand that, but we still are not. This thing is still susceptible. It's still susceptible to immediate changes, right? So if, say, for example, the Fed comes out and says, "Well, you know what? We're gonna increase rates tomorrow." Well, if he's gonna increase rates in the future, the markets will immediately price that in and start pricing it in all the way until we do make that decision or make the change. If we get that initial spike down, that would be GTII and everything under the sun. Everything under the sun will also react towards that bottom. Okay, so that's why I mean that we have to keep an eye over what Fed chair can say tomorrow. So let's look at small caps. This is going to be your IWM ticker, right? This is your Russell 2000 ETF. This is measuring the small cap realm. We need to know where this can go. In fact, we've had a massive, massive recovery here after our top side targets. Guys, we've been trading the crap out of this. We've been hitting every single target on the way up and on the way down. Okay? So just know that this can be seen in a specific way as well. Okay? So tomorrow, it looks like we have still an upside pivot here on the 4-hour time frame. That tells me that this resistance of this candle here, which would be your prior day's high, today's high, the 207 or 206.99, as soon as you break out of this, we're very likely going to the top side here, right? Your resistance range is going to be, once again, that very same one that we've been talking about if you've been following me. Okay, that's going to be right here, 207.75 to 208.15. But do we see a pullback first? Because we're talking about a pullback on both FNGR and on GTII. So if they have a pullback, then let's identify it on the index and see if that really is the case. Okay, so let's pull up here the stats. And actually, you know what? We'll pull up here the hourly time frame. I want to see what this is telling us as far as momentum. Okay, so the momentum here on the hourly still pivoted towards the upside. Let's go deeper. Let's go more granular. Okay, there it is. So your 15-minute time frame is already showing some weakness. Let's go deeper. Your 10-minute time frame is also showing weakness. And your 5-minute time frame is definitely showing that weakness. So we have local weakness here. Sorry, wow, I can't speak. So that means the likelihood of pulling back into the areas of about 205.80, maybe if we can go deeper, sure. Let's observe 205.03 to around 204.46, prior day low. Then we can get this pullback and then reload for a continuation to the upside. That's how things tend to work out. So if the IWM is showing you small caps are going to present a potential sell-off or weakness in the immediate short term, that's literally coinciding with what we looked at regarding FNGR's drop right down into the zone here 295 to 314, and also GTII's drop to this zone of 2182 to 2272 with a potential 20-cent bottom. You see how everything kind of rhymes together? Everything kind of cascades together? That's the way the markets kind of cycle. And there's going to be nefarious actors there, and there's also going to be a lot of predatory price action. But that predatory price action comes hidden with the broader move. So if the broader markets are going to sell off, you're going to get predators to come in, and we need to know when that happens. We need to identify when they could take it. Let me say it like this: if I were, for example, a hedge fund manager and I was short GTII, I would particularly wait for the broader markets to sell off so I can aggressively hit that bid. Right? So then this thing could really dive. And no one could say anything because it's the broader markets are selling off entirely. It's selling off. So now imagine when the broader markets run to the upside, which is what it's been doing. And this is why we've been getting the upside on GTII and FNGR and other tickers too, right? Aside from the little bits of catalysts here and there, the broader markets also support the continuation to the upside. More of this is what I'm going to continue mentoring you with in the ArcMasters course. So please go ahead and get in touch with me at that email. We put it down right over here. It's ArcMastersCourse@gmail.com. Hit that email, and we'll learn how to be able to read this. Right? We're gonna do a condensed version of the I guess the fundamentals of trading. I'm not talking about fundamental analysis. I'm talking about the fundamentals of charting, right? And observing the markets the way I do. And then as soon as we get that short condensed version of the 18-week mentorship, we're then going to move on to strategies. And that's going to be your actual mentorship, right? That's going to be the strategies mentorship, okay? So reach out to me at this email here, and then we'll be able to set you up. So now, remember, guys, the ETF is showing you potential weakness, which is then cascading into your two small caps that you're most interested in. Okay, if we're gonna get that immediate short-term downside, keep in your charts. If you're observing here multiple screens, or if you're looking at your phone and your computer, keep on one of them your index, and keep on the other your ticker that you're observing or you're trading. We must know what the markets are doing, and most importantly, guys, if I have my green traders in here, consider risk off tomorrow. Okay. It's going to be very dangerous in the markets tomorrow because it is Fed day. We have minutes and the CPI data coming out. The inflation report is questionably one of the most important reports in the broader markets today because it directly reflects to the Fed Chair Jerome Powell's decision to overall cut rates or increase them or maintain. Okay, so tomorrow is a very, very dangerous day to trade. Okay, so I urge you, remain cash. Remain cash. Observe it. Take notes, because this is going to be a continued thing, right? Remember, the opportunities in the market are there every single day. And for those of you who are trading with me in the ARCa Bulls trading team, you see that every day. Today, I mean, I can't even tell you how many hundreds of % people made on the calls today. It was incredible, right? So you can see that we don't need to take the one trade today because we're going to miss out. We don't have to. We can just wait for the next setup. There's one every day, you guys. I love it. What's up, John? Really good to see you here. CoinFox saying today was a lot of longs closing positions, aka piercing and the short. Let's see, perishing, and then the shorts also covering to de-risk before tomorrow. I completely agree. I agree, guys. If you're gonna remain cash, if I'm gonna tell you anything here, you're gonna hear anything from me. Hear this. Tomorrow is gonna be very dangerous. Stay cash. Stay safe. And then we'll trade. The easier day to trade is going to be your following day, right? After the Fed speaks, that's going to be your easier trade. Okay, I know that we still have more coming out, so I guess we can see the economic calendar real quick to keep these things in line. Okay, so yeah, check this out. Wednesday, April 10th, core inflation rate, both month over month and year over year, are coming out. We have the inflation rate month over month and year over year. We have the FOMC minutes. So this is all tomorrow. Okay, now, I guess this is also something that's going to move the markets, but it's probably going to move it before we even trade intraday. So this is going to be your producer price index month over month on Thursday. Okay, now moving on to Friday, we also have the Michigan consumer sentiment. Okay, so all of these things kind of move the market. Okay, especially PPI and CPI. Okay, and definitely the Fed minutes. So make sure that you can remain cash and push on to the next day of trading. Now let's take a look at one more thing here. Let's take a look at the heat map and see what's really trending and or what's declining hard, right? So it looks like I guess the most concentrated area right now is finance, right? So look at JPM dropping minus. There's going to be 0.67. We have finance appears to be the most volatile right now, aside from health technology. And let's see, process industries is looking a little green. Consumer durables is definitely all green here, including Tesla. That's not bad. So, guys, if you want to observe what's pushing in the market, bullish or bearish, definitely go up to your TradingView software. If you don't have it, also get into the description below and use my link, right? Help me out. That'll definitely give me some points here with the affiliate stuff. So hit that link, start a free subscription with this, and you'll be able to pull up your heat map, and you'll see what are the things that are trending. Okay, so now that we know that, good deal. Let's look at the S&P 500. What's that going to do for us? Because remember, sometimes when the S&P 500 is falling and you have chips falling and you also have these large caps falling, your IWM can sometimes maintain the S&P 500's integrity. Okay, so in this case, let's see if it's actually maybe the SPY that's keeping things up right now, right? This is another thing that we can observe too. 4-hour time frame appears to be a little flat in the price action, which is very much what CoinFox was saying a little earlier. He was saying that this is keeping things kind of consolidating right now. People are removing risk from the table in order for us to trade tomorrow, which, by the way, if we're getting contraction in the markets, that is leading towards GTII and FNGR. That is leading towards their potential decline in price action algorithmically. Not sell side pressure, not short side pressure, algorithms, right? We're talking about contraction, and the algorithms will naturally bring the price down to a fair value where somebody's interested in buying it, okay? So Brett Montgomery saying so for tomorrow, the shorters will be having a window jump Wednesday. It could be an ugly day in the markets. Yes, let's just say this, Brett. If Fed Chair Powell ends up saying that, you know what, the plan here for maintaining the inflation rate at the current valuation where we are is probably coming to an end, and we're going to consider a 25 bip rate hike into the coming months. That would be a bloodbath. And if you guys were watching what JP Morgan's Jamie Dimon said today regarding the markets and regarding the prop in the markets just being way too frothy, and there's likely going to be rate hikes, that doesn't sound too far-fetched. There could be an overall correction, and we have to be ahead of the curve in order for us to determine that. So if we're reaching the top side in a lot of these tickers that we're trading, so then I guess tomorrow would really give us a true clue over what we should do with risk-on assets in general. So if we're going to take the risk-on assets to a risk-off position, it would be in question. The question would be answered in days like tomorrow. Okay, so please remember, if you are day trading, right, consider remaining cash for tomorrow. There's going to be extreme volatility, and I can tell you that this is a lot of things that professional day traders say. We got the breakout, but no follow through. So if you got the breakout and you were expecting the next topside target based on an average true range of targets, that means that you're probably not going to get that target, and you're going to get trapped in the position. Okay, so remember, remain cash during these times. I understand that some of us have longer term holds, which is going to prevent you from doing that anyway. You're going to be kind of riding the wave of everything else happening. So I get that. Okay, I get that. But this is going to tell you, tomorrow's going to tell you whether risk on remains risk on, or risk on should be considered for risk off as a potential. Okay, so now the SPY, like I was saying here, flat on that 4-hour time frame with contraction. If we're getting this amount of contraction here, that means that the SPY is likely to come down again. Okay, we have a little 4-hour shooting star too. Some basic candle analysis can tell you that we have a downside. Let's go to the hourly. Hourly time frame declining here, right? So if we are to, let's see, the bottom side supports here. Without looking, the SPY has around a $4.50, $4.60 average true range. That means that for wherever it opens, whatever valuation it opens tomorrow, say if it's in the 519 or 520, if it opens up at 520, that means that it has 460 up and 460 down. Okay? So if that really is the case, then 517 to 516 would be your bottom side support, and your top side resistance would be 520 to 521. We already have that within here. And why does that rhyme so freaking much? Well, because that's very much what we've been trading here for a great deal of time. This area here is so concentrated. Okay, and this is why I'm saying that it's going to be dangerous tomorrow, because tomorrow is going to be the freaking final day where we break out of this range here and really decide where this is going to go finally. Okay, so maybe consider risk off. Okay, so if the SPY sells off immediately, that's going to sell off the IWM, which then is going to sell off FNGR and GTII. If we continue to rip to the upside, because what would be the reason? What would be a reason for us to continue to the upside? Well, here's one. It's elections year. Are we going to sell the market off? Will the market sell off on Biden's rule? I don't know. But something tells me, say for example, this situation, right? Just hypothetically speaking, if Trump ends up getting elected, will they dump the market on him? We're talking about messing around here to the maximum. Okay, so there is also that potential, right? We could face a very short-term correction anywhere between the early parts of April into maybe May, June, around there, right? And then we'll start the accumulation process, potentially get ourselves even a little bit of a correction in September, October. Historically, that's what happens anyway. And then you'll be seeing the November. You'll be getting the Santa Claus rally, right? I can already see it kind of play out. I'm not sure that we're going to get a complete sell-off here. I'm thinking that we may get a short-term correction, shake off a little bit of those longs, and then have the new longs re-enter the position at the bottom side of whatever range that may be, depending on how bearish or how hawkish the news is coming out of Fed Powell, right? So if that really capitulates us, then let's find the bottom side and long the bottom. but before we long the bottom, we may have to, a couple bounces. We may have to short the bounce a couple times per CoinFox's language, right? So Brett's saying it makes me wonder what or if the plunge protection team will do with negative data. So you're talking about the PPT, right? So if the plunge protection team comes in, that would be on really specific situations. And if we remember correctly, there was a capitulation event that started declining on the SPY, I think on a Wednesday of 2021, mid-2021, where the PPT came in and dumped, I think, thousands of long put options into the pool, where it pressured price action into an immediate correction to the upside. So if there is an event, I think that there is a metric mathematically for that to kind of trigger, and I believe it's BlackRock, the primary client for the Fed. Okay, so if that's really the case, then I believe that that's set to maybe a 2 or 3 standard deviation drop on a daily time frame. I can't tell you what that's going to be because it needs to trigger from somewhere. So if that trigger happens at a certain valuation, then we're going to know what that 3 standard deviation drop may be. Remember that your average true range is $4.60. So if you want to get a rough idea, just 460 times 3. So if you're getting that 12 to 15 point correction, yeah, that's roughly when things tend to halt, or in this case, you're not going to really halt the SPY. You're really just going to correct it. So maybe. I'm not going to negate that, and I'm not going to keep it out of the potentials or possibilities within the market, because we've seen it happen already and within a shorter time period too. But here's another thought for you, Brett. I don't think that what the Fed is going to say is going to be so bearish to sell off the market that big, because if it does sell off that big, that means that the entire thing falls off. Everything within GTII and FNGR included, right? All small caps, micros, mids, large, everything would face an immediate sell-off, because we're talking about the pressure of the giants here. We're talking about the pressure of big tech, and we're talking about the pressure of the S&P. We're talking about the pressure of the 2,000 small caps built under the Russell ETF. I mean, there's an immediate amount of pressure that can be applied throughout the markets. I don't think that we're going to get something that bearish, but it's not out of the question. Okay, so tomorrow is going to tell us. Tomorrow is going to tell us if we're going to be able to maintain risk on these assets or not. Okay, so immediate short-term pullback here for the SPY, and then we'll see about reaccumulating here. If you are trading alongside in the ARCa Bulls trading team, you will observe something that we tend to call the algo switch, right? So usually when the price action drops and drops and drops into the time, I'm going to speak to you in PST, in Pacific time. Okay, so market open for me is 6:30 a.m. Pacific. Okay, so you get a certain spike up and a certain spike down at the open of the trade. Usually like this, right? You get the quick, 1 standard deviation or 2 standard deviation up and 2 standard deviation down in one shot, and then the decision of making the upside or downside is made by the psychology. Okay, so if we get an upside continuation here, usually by around 10 a.m. between 8:45 a.m. and 9 a.m. Pacific time, which is roughly Euro markets close and or lunchtime NYSE, things shift. Your algorithms usually shift around that time. Similar here, right? We got this continuation to the downside. We got a little bit of a pump to the upside here, and right when we started hitting that 9 a.m., we started changing that price direction, and we ended up making the reversal too. So that typically happens within a certain time frame of every day. Okay, so this is why I say sometimes, guys, I'm not the biggest fan of the small caps or the micro caps because they tend to deviate from the natural behaviors of the market, right? So if you're trading something that's more susceptible to market movement, then you're going to know and have an edge over when things may reverse. Imagine having that knowledge. That's more of the things that we practice every single day in the ARCa Bulls trading team. Okay, you guys, so you know what? I haven't even shared it here with you, right? But please go ahead and hit that link in the chat. Join the ARCa Bulls trading team. Subscribe to it. And you'll be able to observe these things happen in real time. Okay, you guys. So as far as the Fed tomorrow, I can see a shorter time frame drop here, okay? By the time the euro closes and by the time we get the algo switch, then there could be a reaccumulation event towards the upside. If the Fed gives us good news, meaning either news to the expectations, considering the inflation report and all that, and the forward guidance from the Fed, then the price action may actually beat the 520 to 521 range and continue onward beyond its average true range. Okay, but if they do if we get bad news, then this would negate your upside probabilities and start falling. Okay, so guys, pay attention. Pay attention. If we get this thing to sell off, that means everything else will sell off too. Okay, so it's going to cascade little by little. If I were to put a little bit of a visual representation, then let me do it like this. Your SPY and NASDAQ, right, will go up and say that they reach a top like this and they start curving, right? This curve here, that would be your top end of the SPY and your NASDAQ following this price action here as this curves to the downside. Then it's going to be your mid caps to get this run and start curving down as soon as it starts getting right below that trend from the broader markets. As soon as the mid caps start doing this, then your small caps are then starting to run up like this, and they will also start to curve down like that too. Right when you get this curve all the way down there, your micro caps will also start showing that deviation as well. And right when this thing faces the bottom side, its absolute low, your broader markets will then start a new wave towards that upside and correction. And that's going to then lead everything else into that cycle where it starts running up all over again. So in other words, we're building infinity here every day. That's complete chaos. Okay? We have to follow the structure of randomness. And this is the only way that we can do it, okay? So heads up, all right, team? So I really appreciate everybody for coming on by. Please remember, hit that like button, subscribe to the channel, make sure to do everything necessary to get that algorithm finesse so we can get some more viewers in here. Okay, I have a couple requests coming in actually. Yeah, sure. Let's do that. Let's take a look at ticker symbol Meta, right? This thing has been in play here. And by the way, you guys, this was our short play today, right? We entered the market, we entered risk right around this area here, and we banked out on a massive, I am talking about a 10 to 11 point drop all the way to our target, and we met it with grace. Okay, so this team was a huge gainer for the ARCa Bulls trading team. Guys, I couldn't be more thankful for us to observe the markets and really play these types of moves. I know that Sebastian here, one of my analysts, ended up getting some call options down here, so congratulations on that, buddy. Now, I assume that you're wanting to know if this is going to face a continuation to the downside. Well, maybe we can see this from the 5-minute time frame. So those of you who are trading things like GTII and FNGR, this is not that much different. So you can also gain some knowledge over how those things trade like this too. Okay, so check this out. This is your initial drop. This is us falling beneath the EMA 200, beneath this SMA 50, beneath the blue SMA 100, right? And now we're coming up, right? I mean, we fell all the way down, but now we're coming up to test the resistance of your EMA 200. We're failing that very, very often. The first pump to the upside beyond that SMA 50 is not the one. That is not the one to succeed a continuation to the upside. Likely, the second or third time breaking above your moving average will do the trick. Okay, so if we get a continuation to the downside here, we're already getting a nice shift on the SMA 100. I think here in the immediate short-term time frame, 5/14/45. And now if we pair that with tangible targets with price action, I think this would be your low right here. But know for a fact that if this thing does continue to go down, remember, Meta has a big average true range. Let's pull up the stats window. This has $14.21 in average true range. That means, guys, that's how much we have as confirmation to trade this. Right, I know you're thinking to yourself, like, dude, this thing's a lot of money. How can you even afford one share? Well, that's because I don't trade shares on this. I trade options contracts, and they're worth anywhere between $80 and $200, or maybe $400, depending on how close to at the money you wanna trade this. But those are completely levered, and the options contracts bring in hundreds of percent, right, in gains. So that's why I trade. That's how I trade Meta and these really expensive stocks and blue chips. It's not because I have the freaking cash to trade individual shares. It's because we have an instrument called options, right? So those options contracts enable us. So yeah, I think here that if we continue to the downside, let's see the 24-hour chart, and I'll tell you what the bottom end could be. Okay, and let me pull up the stats window here. Yeah, check it out. This is your bottom side on the current ATR low, your 24-hour, which is considering post-market activity. It's saying 505.12. And what's our discretion saying? 505.89 to 509.99. Yet again, that same target that we were observing today, and the very same one that we experienced. Okay, so yeah, I still think that we still have some pressure to the downside here in immediate short term. And then we can get a push to the upside. But here's the curious thing. How will this play out? How will the downside play out? I think the downside is going to play out with a gap up first. So this is going to be a gap up to a potential gap fill, not a reversal. It's potentially going to be a gap and go. So, yeah, I do think that we'll get let's see, up to these targets here, anywhere between 521 to 530 by market open. And yeah, and then from there, I could see this thing selling off immediately. Okay, so CoinFox is saying, I'm pissed. I missed the meta dump, but I caught the futures move down. Oh, my dude. Thank goodness, at least for that one, right? Okay, you guys. So, and I also put out, guys, if you're watching right now, please know that I'm going to start putting out, this was CoinFox's brilliant idea, right? I'm going to start putting out these videos called Lightning Round, and those are going to be the highest moving gainers in the small caps, right? So I put together three tickers today, including SLNA, MGAM, which is M as in Mary, GA as and M as in Mary, and I believe it was ACRV, I think it was, right? So I'm going to start doing that in case that there are some people getting bitten and they want to get enlightened over where those tickers can go on the following day. So I'm going to start including that into the cycle here and see if we can benefit from getting some more ARCa Bulls members to come into the stream every morning with me at 6 a.m. Pacific to trade the markets in a more responsible way. All right, team. So yeah, I do think that you're about to get a bounce to the upside here. You have your hourly time frame ascending triangle here, right? That's going to give you your top bound. And if I were to observe that top bound, I think that you can get, let's see, on Meta here at the open. Yeah, it's still within the, it's still within the range that we're observing here. So that would be your, that would be your 529.21 to 530. That's literally the same thing that we were observing today. 530 top, 505 bottom. So get that upside, get the gap up, and then get the downside. So if you are holding overnight exposure on this, consider removing risk almost immediately. Okay, so that's going to be your ticker symbol Meta for this, right? So let's look. Another one that we've been kind of ripping up, right, has been Tesla. But I will say that Tesla has been kind of a monster lately. Notice your hourly time frame upside price with declining volume, right? So this is showing you that there could be some weakness coming in. But here's another little trick to observe. If you're noticing here on the 5-minute time frame, you're breaking above a certain key area. So that means that this could have been a very local, I don't know, maybe a pennant of sorts or whatever. So if that's really the case, then we're breaking out of this zone here, right? This is your breakout zone. You're likely going to face a little bit more of an upside, 177.52 to maybe 177.58. We were observing this target today. Okay, then you would get the pullback to validate this area as resistance. 177.31 validates as resistance. Your SMA 50, your EMA 9, your SMA 5, your EMA 20, all of it will support for a continuation to the upside. Tesla is looking pretty damn powerful, okay? So it's getting a little bit of deviation here on the bi-hourly, even into the hourly time frame, but overall, when we jump into the 6-hour time frame, you have massive upside. We have expansion here. Let's see, 8-hour time frame. This is really healthy inside of the bullish control zone. Guys, there's continuation to the upside here. It looks like for days, to be honest, right? And here too, right? Your 12-hour time frame is powerful as hell. And there is your magical signal. This is set to make this. Yeah, this is getting a little dangerous here. Tesla may make a freaking huge move again, and I think it may be to the upside. Not as powerful as the one that we identified, guys. If you're watching this, what I mean by powerful is that we ran a back test on this a few weeks back, and we were able to call the very top of this, 240, 250. We were able to identify the bottom side of this. We talked about a 164 bottom from freaking weeks ago, guys, and this was a big gainer for us in the ARCa Bulls trading team. All right, so I do think that this is getting ready for a really clean signal to the upside. The way I can tell is that we're currently in the bearish control zone with an upside pivot. And notice that volatility is entering the critical contraction zone. As soon as this starts coming out with expansion beyond the 15%, and we then start entering stochastics into the bullish control zone, Tesla is likely to make a huge move to the upside. And we're observing this in the daily time frame, so that means that could we be getting a hint? Could we be getting a hint from Tesla that we're going to get some good news here? Never, never, never make a decision based on a hint on a stock. Okay? Do not make the decision based on how I'm doing it right now. I'm just saying that this is showing behavior of a huge rip, and I don't know if it's gonna trap the hell out of longs here or whatever, but it is showing it, and I think it's worth a look. At least worth a look, okay? So Ian Tucker saying almost 6 weeks ago, and I hit my first 1K trade win. Not financial advice, just the truth, my bro. I remember that day. It was so cool to see you win like that, man. I love it. I love it. Man, we've all been experiencing those kinds of pushes, right? Brett, sorry I missed you, buddy. Saying I'm in California as well. I call it the morning flush, and usually seems like it's over before 6:50 to 7:05 a.m. Yeah. Now here's something for you that I tend to teach my master students. If you're observing the morning flush on a specific ticker, backtest that. Backtest how far that downside is. Backtest how many times the downside happens, and you're going to start exposing which days are the ones to likely face the downside and how much the average downside will be. If you are practicing statistics and you can get up to 140 iterations, because that's when you create habit, right? Statistically speaking. So if you can build 140 iterations in a backtest and identify how many of those times succeed the downside and then measure how far the downside is, brother, you will have an edge over the markets like no one else. And I haven't done it. So Sebastian saying Tesla is already expanding into time frames up to the 12-hour. Bro, yeah, that's exactly what I was noticing here, man, too. This could be a large move for Tesla. I think we need a backtest here on the daily time frame. This could really be something meaningful for price action. I noticed today that aside from this, I noticed that LQR, another micro cap, ended up getting a huge push to the upside it was right before pre-market. It was like in the last maybe 30 to 10 minutes before pre-market opened. And this thing ripped. I mean, it ripped from 143 to 199, almost $2 here, and it completely flushed out, but it kind of recovered a bit. It recovered to its fair value, and it shook out both the longs and the shorts, right? So this thing completely wall-to-wall move up and down, and then it kind of consolidated. The reason that happened, I don't know if you guys are familiar with this, but the reason that happened was because they marked a 372% increase on their earnings report. So it was a huge gain on their side. So I don't know why the asset didn't continue continue ripping here, but the great news the great news is that it returned to its prior resistance, which is right above the 140 141 level. As long as we do maintain above that 141, then, the likelihood to face the resistance again right at that 150 is very apparent. Okay, and I noticed that also ticker symbol VIRI ended up getting a little bit of a push to the upside too. And it looks like it happened towards the end of the day, and it actually, and then it actually pulled back. No, this was 11 a.m. Pacific. It pulled back, and then it started gaining again. My goodness, 51.99 was faced today. Goodness, I swear on everything. I have a long position on Viri at around the 46 cent range. So I am, I'm just there. I'm wondering if I should just liquidate the position at one of these runs to 52 and then have this thing pull back to 43 and long it from there. I'm not sure, but that's currently something that I'm observing here as far as behavior within the Viri asset. Okay, so this is it's showing very interesting behavior because it is kind of waving up and down, and it's converging. So what I mean by converging is that it's probably making like a bull pennant of sorts, right? Something like this. And if that is the case, then you all know that that's completely bullish, right? So my goodness. Here we go, right? So that's what I mean, is that this thing is potentially building a bull pennant. We're getting closer and closer to the 65 to 75% to the apex of the triangle, which, remember, when we reach 65 to 75% to that apex, that's usually when a breakdown or breakout can happen. But since this is built during an upside and then you started converging, this naturally favors the bulls. Okay, so if the bulls are being favored here, this means that it's a continuation formation towards the upside. It has huge targets to the upside. I'm not, I guess let's just start we'll call it speculation, okay? But per the traditional trading rules, let's just say this broke out here around Thursday, maybe here, right, in the AM. So around around market open on Thursday, April 11th. The top side, the top bound here is around 83.50. We definitely have we definitely have ranges right there that we've looked at before as critical resistance. And the middle of the target is another range that we should observe, which would be right about here, right? Let me take a line and I'll give you that other target too. What I'm saying here is that it's that very, I'm also not the biggest fan of, but it's showing that there could be some upside pressure based on these psychological signals. So that's going to give you a 68.10 target, and then your closest proximity target would be the breakout target. So let's just say that we broke out there, right, on that April 11th. This is going to be your initial target to talk about. So that would be right about here within this range, 58.64 to 62.81, already a range that we were observing. So if you are wanting to take kind of a screenshot of this, I'll provide it for you, right? I'll give it to you like this. So you can know where the potentials are if this does make its upward decision. And here are those targets. 62.41, 68.25, and 83.97 are the higher these are the probability targets based on a traditional way of trading a bull pennant. Okay, so again, right, it still needs more validation. It still needs other things. We still need to reach the 75% to the apex, all that good jazz. All right, team. So please remember to remain safe in the markets when you are trading these assets. Okay. So guys, I actually am going to go ahead and close shop here. I'm getting some phone calls here from my wife. That probably means that we're having a little bit of trouble with the little man himself, so I need to get over to him as soon as possible. But I can't tell you how much I appreciate streaming again with you guys here. It's been a very good reminder over where I was before this, right? I took a step back so that I can kind of let the air clear from all these haters out there, but they're still there. They're still chilling, right? They're still killing me. So it's all good. Something's never changed, right? But please remember, team, if you are interested in that mentorship program, remember to get in touch with me at ArcMastersCourse at Gmail. And also, I'm going to share that thing one more time right down here. Consider hitting that link, join up, and trade with us live every single morning, team. But again, team, I really appreciate everybody coming out. It was very good to see everyone. If any questions or concerns, you know where to reach out to me. But from here, yeah, let's go ahead and have a good night. Get some rest. I know it's really late in the East Coast. So I love you. For those who stayed up late with me, I love you so much. Thank you so much, Candace, for everything you do. And big hugs to you as well. I'll make sure to give it to my little guy. Brett, thank you so much. Absolutely, man. I'm happy to do it. All right, you guys. So I'll catch you in the flip side. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, 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 never. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well and a very, very good rest of your night. And I will catch you at the Bell Mañana. Adios. Oh, yeah.